Okay. Um, Today I'm talking about becoming an early investor in innovation. What I just want to talk today is two main things that we can do is to find startups and invest in them before they become very highly successful, before they take their company to the initial, what we call IPO, initial public offer. That's one thing we can do. Another thing is for us to be able to identify an asset before majority of people know about the assets, and we can try and buy the assets. And even sometimes we can even buy an asset when they are doing initial public offer. We're going to see that in my presentation. So that's what I just want to talk to you about today. And I posted something on Twitter recently that creating an enormous wealth is not just all about spending a lot of money. It's not about investing a lot of money. It's all about having the right kind of information, is having the right network and opportunity. We're also going to see that in some of the examples I'm going to share with you today. So being an early investor in innovation means providing financial support and resources to early stage companies or their projects that are developing novel and disruptive ideas, technology, or business models. So it's all about trying to identify startups. It could be in Africa. I'm going to show you an image of the kind of money that's going to startups in Africa. There's a lot of money going to startups in Africa. Even for example, in 2020, the largest amount of millions of dollars went to Nigeria. A lot of startups going on there, but if you don't really know about it, you will not know how to tap into it. So it's all about trying to invest in those startups that you think that will do well. Sometimes it's just about just $1,000, especially when you are starting with angel investing. So that's the first thing, providing financial support and resources to startups. Another thing that we can do to invest early in innovation is to identify asset, like I mentioned the other time, that as asset that has potential to do well in future. It could be stocks, it could be property, it could be crypto, it could even be intellectual property that has potential to really do well in future. You being able to identify it before majority of people know about it and investing in it. So here are some key aspects of being an early investor in innovation. Number one, like I said, investing in startups. Early stage investors often focus on investing in startups or emerging companies that are at early stages of development. And most of those people call themselves, venture capitalists, angel investors. Imagine the people that first invested in Facebook before even Facebook did the initial public offer, many years ago. Imagine the kind of money they made because they invested in Facebook. Or say, for example, if you know someone that is starting a company, there's someone in a group that just started a food company. And if you think that this company can become very, very successful, this person might just need, let's say, 100,000 Rand or 1 million naira or 500,000. And if you know that this company will do well, and you can say, okay, I'm going to have a certain percentage of the share of the company. And that's how you become an early investor. And if this company is going to do very well, and in future, it might even can even be listed on the stock exchange. You imagine the kind of money you can make. So that's the mindset of early investors innovation. I was talking to you the other time about a slide or an image that shows where Africa's startup activity is concentrated. In 2022, in 2020, this thing was based on 2020 data. Now you can see that the highest venture capital fund goes to Nigeria. In 2020, about 300 million dollars to Nigeria, and also Kenya too, but Nigeria had the highest, just about $2 million difference between Nigeria and Kenya. So you can see a lot of things are taking place in Africa. So we must not, think that is only in US that people are making money. A lot of money can be made when it comes to early stage investing in Africa too. You can see from these. I was just thinking the other time about Flutterwave. I'm sure you know about Flutterwave, a company that started in Nigeria, is now a $1 billion company into payments. And you can see people that invested in it many, many years ago when the company was not known, they will have made a lot of money. So it's all about trying to identify companies that have a potential to be very, very successful. So you really need to know them. You really need to do your own work very well. You need to do your research very well so that you can reduce your chance of losing your money, because it's also very, very risky. We're going to see the other time it takes a lot of risk. But they said the higher the risk, the higher the reward. Okay. So like I said the other time, risk taking. So early investors in innovation are willing to take on higher levels of risk compared to traditional investors, because they understand that, the money they invest, they might not recoup return on their investments. So what they do is that maybe, especially venture capitalists and angel investors, they invest a lot of money on all these startups. And many startups, many of them may not make it, but they know that, okay, say for example, if they are investing, let's say in 10 startups, they target at least one will make it. So if that one that will make it will cover the loss they are going to make from the 9 that won't make it. So they that's what they try and do, but they love taking risk. So if you don't like taking risks, you will not want to go this route. So they like taking risk. And like I said the other time, the higher the risks, the higher the potential of return. So the lower the risk, the lower the return. So if you don't want to take risk, if you are risk averse, I think this is not for you. I think let me try and view some people in the waiting room. Okay, this thing is the same person. I don't need to. Okay. What's happening? Okay. Okay. So like I was saying the other time, the higher the risk, the higher the potential return. Okay. So then you also have what is called seed funding and Series A fund. There are so many types of funding that you can get involved with. The seed funding is the first initial money that the investors, startups need when they start their business. That's the seed money. Then after some time, you also have Series A funding. Series A funding is, for example, maybe they want to do some development, they want to do some marketing, development and things like that. Then they need more money. There could also be Series B until they now get to a level that they get to the initial public offer. That is when they now take it to the stock exchange, where they get money from the public. So they really try to source money at different stages before the initial public offer. So those times, whether you're talking about when they need seed funding or Series A funding, you can see that that is an opportunity for early investor to make money, because by the time you are, committing your money at those particular time, you are getting part of the shares of the company, and you get it at a very reduced price. So you can see different stages of investing before the initial public offer. The seed, the early stage, the Series A or B, or the Series C and D. So they always requesting for money at different stages. So one thing that happens is the more money they request for, the lower their shares. I'm talking about the founder. So they always reduce their shares in that company because they are selling part of the shares, in the company. So those that can really invest at an early stage, they can really make a lot of money. Although you can also make money if you are buying at initial public offer price, but the more money is made at the earlier stage. And you can see the amount of money that is raised at each stage. So, say for example, just with $1,000, you can even support them with when they're trying to get a seed fund. So another thing that can be provided for startups is kind of guidance. Like you want to, take for example, if you are already an established investor, maybe you have been in that field before, you can offer guidance to such investors. You can also provide them with your network, with your contacts, because making it in business is all about network. It's all about the people that you know. So there are so many things that you can offer apart from money to startups. And another thing that is also very, very important is that if you want to be an early stage investor in innovation, you must think long time. You must think long time. Early investors in innovation typically adopt a long-term perspective. They understand that it might take several years for a startup to achieve significant milestone, generate substantial revenue, achieve an exit event like an initial public offer. So you must understand that it takes time. So you must also have a long time, kind of long-term horizon, if you will be an early investor in innovation. Another thing that's also very important is for you to have a kind of what is called portfolio approach. As an early investor in innovation, you want to try and diversify. You want to look for startups in different areas. Maybe you might not want to focus only on the financial sector. Maybe you want to look at energy, you want to look at food. So you have startups in different fields, so that if one area is not really making it, if one sector is not really making it, another sector is going to be making it. So diversification is very, very important for early investor in innovation. Another way to be an early investor, like investing, like I said the other time, apart from investing in startups, another way is to be an early investor in innovation is by identifying and acquiring assets that have the potential to become. Please, can you mute your mic if your mic is acquiring assets that have the potential to become highly valuable before the majority of people recognize their true worth. This approach can apply to any asset. We're talking about stocks, crypto, property or intellectual property. Okay, let me just give you an example of some stocks. There are some stocks I just want to show you during their price at their initial public offering. At the initial public offering, public offer. Tesla in 2010 was $17. You know, imagine people that bought it at their initial public offer. It was $17 in 2010. Amazon, their IPO price was $18. Microsoft, Microsoft price was $21. Apple price was $22 during their IPO, and then Google was $85. By 2020, you know, by 2020, their prices were $60.40 to $695. I'm talking about in December 2020. That's for Tesla. Amazon, 3001 to 3003. Microsoft, 215 to 220. Apple, 120 to 135. And Google, 1,700 to 1,800. Can you see the kind of astronomical growth? You know, I'm talking about people that bought it at that initial public offer and didn't sell it. So even buying a stock at initial public offer, I can also still liken you to still an early stage investor, especially if it's a very, very good company. I can also still liken you to an early stage investor, but I can't compare you to someone that started investing in that company from the seed stage, you know. Okay, let's now look at example of Tesla. Assuming someone invested $1,000 during their IPO in 2010, can you look at what the person will have now if the person didn't sell it by 2020? That's $200,000. $200,000, because there were times they gave what you call it's not dividend. There's something you call when sometimes a company can decide that, look, if you have one share, we're going to give you another one. Sometimes I think that was the time they did that. Tesla did that. So $1,000 invested to buy Tesla in 2010 will now be more than $200,000. Can you see? So I was saying the other time that sometimes making money is not all about having a lot of money. It's all about knowing the right thing to do, the right decision to do, having the right access to right information, having the right network, you know, having the right attitude, having the right mindset. You know, someone that bought it in 2010 but sold it in 2011 will not have this type of money by 2020. So there are so many factors, that psychological factors that are very, very important. Knowledge, having knowledge. So all those factors are very, very important when it comes to creating wealth. So what assets have the potential to become highly valuable before the majority of people recognize their true worth? I mean, what asset in the next 10 years, next 5 years, what are the assets? How can we determine those assets? How can we determine those assets? Yeah. What are the assets? Someone says something, Mark W. Yusko. The greatest wealth is created by being an early investor in innovation. Making that investment requires believing in something before the majority of people understand it. You will be mocked, ridiculed, criticized for your non-consensus action. It is absolutely worth it. So what is that thing that can become a very, very successful asset? What is that thing? Yeah. I still believe that Bitcoin, Ethereum, I believe this is time for crypto. It's still new. Bitcoin is about 10 years. Crypto is still new. Ethereum is about six years. They are still new. So I still believe that this is the time to stay investing. crypto, there are also other stocks. People have been talking about what do you call them? AI. I mean, what are the companies that somebody said that I think the founder of Open AI says something that AI is going to change the world more than, I'm not sure whether I agree with that person, whether I agree with him, more than I think agricultural revolution, internet changed the world, that AI is really going to change the world. So what are the companies that are really investing in AI? Because I believe that companies investing in AI, you can buy their stocks now. And I know that they're really going to do well. Company like Microsoft, company like Amazon, company like Google, company like IBM. Those are the companies that are really investing in AI. So those companies, if you have them, going forward, I believe that you are really still going to, it's like indirectly investing, early investing in innovation, because AI is new, is a new invention that is revolutionizing our world. So you can begin to invest in indirectly in AI by investing in those companies. So that's one thing. That's one thing you can do to tap into what AI would benefit a lot of investors. So I really believe that. So I'm thinking of buying. If I have some money later, I'm going to be buying some of those stocks of let's say Microsoft, Amazon. I know their prices, especially Amazon, is very expensive. But I was looking at the price of Microsoft the other time. Microsoft is low. Looking at the price of I think also Apple. So those are the companies that you want to buy if you are talking about shares. Then you also want to talk about people that don't mind the volatility of crypto. You can also be talking about some cryptos that you can really buy. Yeah, and like we've been talking about since we came today, we've been talking about startups. So if you know any young person that has a bright idea and is very close to you, maybe the person is trying to build a company and is very close to you, and you do your research and you realize that his idea is genuine and his idea has a potential to become, a multi-million-dollar business in future, you better invest in that guy and say, okay, I'm going to have some part of your company, but you have to do it in a legal way. I think you might need to get a lawyer so that everything will be documented very well, so that at the end of the day, there will not be story. So all those things are very, very important. So these are the ways we can become an early investor in innovation. I think that's what I have for us today. Any question, or if you have any contribution, you can go ahead and do that. Thank you. Okay, let me stop sharing. Okay. Any question? Any question? Any contribution? Okay. Okay. If there's no question, I just want to thank everybody for coming today. Thanks everyone for coming. I hope that you've been able to learn one or two things today. And let's keep doing our research. You have to do your research. When it comes to investing, you have to do your research. And You have to be patient. Someone said, it's not timing the market, it's time on the market. You must be patient. You must think long time, like I said. You must think long time if you are trying to invest. Then you must also try and identify a type of asset that has given you some kind of profit before. Take, for example, some of these investments, they are in cycle. Yeah, I remember when I invested in crypto in 2019. From 2019, it did very well, and it rose. I think 2021, it rose almost to 60,000. Then at the end of the day, it crashed again to around 15,000. I'm talking about Bitcoin now, to around 15,000, 16,000 in December last year. It started rising again. You can see that there's a circle. So once you understand that circle, you can really make money there. But the longer you stay in that asset, the easier for you to make money in it. So patience is very, very important. So patience is a virtue when it comes to investing. Then you must also try and find out what type of investing, what type of asset do you like? Some people can invest in crypto. Some people can invest in stock. But some people like property. Some people want to invest in small business. They want to invest in a startup. So you must understand yourself. You must know yourself. Then you must also know your risk appetite. Some people like taking risks. Say, for example, I like taking risks, but there are certain risks. There are certain risks I don't like taking. No, I won't do forex, but I don't mind investing in crypto. I don't mind investing in the stock market. But so you must know yourself. So once you know yourself, know the type of risk you can take, and also later on, I'm going to be writing about abundance mindset. It's very, very important for you to have abundance mindset. You must believe that you can make it, that you can be successful. You must believe that you are going to be rich. So it's all about the mindset. So if you have that mindset, it's easier for you to become highly successful. Warren Buffett says something. He said, "I've always known I was going to be rich." He said, "I'm going to be rich," and you pray about it, and you also think of becoming rich for a right reason. Why do you want to be rich? The reason should be, I want to be a blessing. The reason should be, I want to do something. I want to change my world. That should be the right reason. And once you have the right reason, you have the right mindset, you have abundance mindset, you are ready to do your research, you know yourself. I absolutely, you're going to be very, very successful. So thanks once again for coming. See you next time if there's no more question. Thank you.
Yeah, thank you so much.